Hello and welcome to our webinar this morning on blockchain and digital assets. I'm Talem Pillay, and I'm a director in our Risk Advisory Services department. I also lead the Technology Risk Advisory Service line, which deals with all things digital transformation related. So today, what we're going to do is essentially break down blockchain into a little bit of fundamentals to give an understanding to people who's really struggling to understand the difference between blockchain, cryptocurrencies, NFTs, etc. So if we were to look at blockchain, from an understanding perspective, there's been sort of, I would say, a lot of hesitancy and concern. And if I were to maybe break it down, it's everything you don't understand about money combined with everything you don't understand about computers and networks. So if we were to really sort of try and simplify this, blockchain is really a transformative technology that is essentially an immutable ledger. If we were to think about it as the internet and email, blockchain is to Bitcoin what the internet was to email. It's essentially going to be building upon this. Think of it in terms of an Excel spreadsheet with rows and rows of data that you enter into a spreadsheet. Blockchain is similar, except once you input the data, it can never be changed. This ensures that there's no deception in the process and creates a level of trust for different parties in the chain to work together around a common goal. There's also much confusion between blockchain and cryptocurrencies, but they're really quite different. So if we were to take the internet and email example, when email was first introduced, it was basic and text-based with no bold or italic options, and certainly no embedding of images. However, this technology has developed over the years to be an incredibly media-rich application. I mean, if you were to think about it right now, most people essentially live within their Outlook interface. We're still quite in an early evolution of the blockchain space, and we can expect much development to still occur on the applications that are being built upon the blockchain. So how does it work? We're going to get a little bit technical here, just so that you maybe get a bit familiar with some of the terminologies that you may have heard through passing or heard in the media. So a blockchain is essentially that. It's a chain of blocks digitally created. And it's made up of three main areas. You've got your data that sits inside a block. You have the hash, and you have the hash of the previous block. So what does this essentially then mean? When we look at a blockchain, and we would take a simple example maybe of three different blocks in that blockchain, the hash identifies a block and all of its contents. And it's always unique. Once a block is created, its hash is being calculated. Changing something inside the block will cause the hash to change. Very useful when you want to detect changes to blocks. If the hash changes, it's no longer the same block. The third element is the hash of the previous block, which effectively creates the chain of blocks. The hash of the previous block matches. The first block does not have a previous hash. This is called the genesis block. Let's say the hash of the second block is tampered with. This will cause a mismatch with block 3 and make block 3 and all blocks that follow invalid. Hashing alone does not secure the block and does not secure the blockchain. And that's where a concept like proof of work comes into play. So what does that mean? Each block that is created will have a proof of work calculated for it. So to tamper with the blockchain, you have to recalculate all proof of works as well as the hash. There's one additional security feature that is the nature of a distributed ledger, such as the blockchain. Blockchain uses what's called a peer-to-peer network. When someone joins the peer-to-peer network, you will get a full copy of the blockchain. Let's take an example of where we would maybe see this in practice. Traditionally, if we were to look at a stock purchase, you have, it is bought and sold through a broker. The details are stored in a centralized clearinghouse. The clearinghouse acts as the trusted third party in this regard. And then this journals a transaction into their centralized ledger. And this effectively creates the independent record of the transaction to prevent future disputes of ownership. But if we were to compare this to the blockchain, the value of the transaction that is recorded in the ledger is exactly the same. However, the process by which this is achieved differs. The ledger is made public and widely shared across the peer-to-peer network that we previously mentioned. Individual members' contribution to that digital ledger. It is signed using the sender's private crypto key, and any changes to the record after the fact would cause a mismatch in the signature, thereby impacting the integrity of that transaction. And through this, we get the increased efficiency of the transactions that is then processed through the blockchain. So what has this technology essentially done? We have many people calling it the disruption of the decade, and effectively that is true. You would have heard the concept of Web3, and essentially this is essentially what it's essentially based on. So when we look at the various use cases of blockchain, there's a numerous amount of use cases that we can look at, from smart contracts to crowdfunding, prediction of markets, going into Internet of Things. But if we were to maybe just look at maybe a simpler example, we can look at the supply chain process. Traditionally, each member of the supply held their own data separately with no real way to share it. A blockchain allows all parties, the producer of the product, those involved in the logistics of the product, the intermediaries, and eventually the final recipients of the product, to now all share the data that they were already collecting anyway, in a manner that builds a clear picture from start to finish. So if there is a problem at any point in the supply chain, all parties can look to the data to establish where the problem occurred. This would be maybe the potential use case here is, let's say, a recall of a particular product. Another example would be in the financial services arena, and being able to clear a transaction really, really extraordinarily fast. The SWIFT network, which uses traditional payment rails to move money globally, can take a number of days for funds to clear. Using a blockchain as a payment rail can cut this time down to a matter of minutes. But what are some of the challenges then that essentially comes into play when businesses and organizations are then looking to actually utilize blockchain in their digital transformation process? Because it's all well and good to be able to say, we're heading down digital transformation and we want to be able to utilize blockchain as a technology, but there's no point in going down that route if you haven't actually mapped out your digital processes correctly, you haven't mapped out your business case, you haven't mapped out how this is essentially going to increase your profits, increase your efficiencies, decrease your costs. So when we look at some of the constraints to the adoption of blockchain, the one element that needs to be considered in a blockchain is standardizing of the data set. In order for a blockchain to be effective, all parties in the chain need to be using exactly the same terminology. So if we were to look at something simple, if you're moving apples, one company may call that in their system red A because it's a red apple. Another may call it RA2. And the logistics company could call it 127. For all parties to work together, everyone has to agree on a standard terminology to effectively track the product. In order for a blockchain to be truly effective, it's important that all parties involved are actually using the chain. Let's look at a food product as it travels around the world. For example, oranges. We may grow oranges in one part of the world, then juice those oranges in a different part of the world, then put that packaged juice in a shipping container that eventually gets to numerous grocery stores. If only some of the players in the process participate in the blockchain, but not all of them, you're not able to properly track the process and figure out where there may be a weak link in the supply chain. This is a different model where challenges that may have arisen from the blockchain. It's the most often than not, the technology doesn't work. It's often that the governance of this big data repository isn't working because the parties themselves can't agree upon it. Data quality and consistency is important in this process, and it's really critical to understand this. Essentially, the way that you would go about achieving this, if you were to try to implement blockchain through a digital transformation process, it will really be to map your entire supply chain, including all your sort of vertical and horizontal counterparts and parties that's involved in that process, and get everybody to the table to be able to agree on things like data consistency, quality, terminology, etc. But what are some of the other challenges? So we could also look at things like barrier to entry. One of the biggest barriers to entry is the lack of knowledge around technology. The first step for any organization before they consider using a blockchain is to learn about the technology, what it does, the value it may offer, and the risks for their particular business. The focus for business needs to be improved processes and return of investment. So, as I said earlier, there's no point in necessarily just implementing blockchain as part of your digital transformation just for the sake of doing it. What's going to happen in those instances, if you just implement it just for that sake, you're going to end up with really a failed use case. So a thorough understanding and strategy is required before any organization can take that step in terms of implementation of blockchain in their digital transformation process. Whilst blockchain may not be a fit for every organization, it is without a doubt a disruptor for business and industries. So even if it might not fit your own organization where you are right now and your own industry where you are right now, they're definitely different parties that's coming into your particular industry that's going to look at disrupting that industry, that's really going to affect the current players. It is a technology that is based on contributions from people, and there will certainly be those organizations that will be left behind if they're not willing to embrace the technology, either from an implementation perspective or from actually, from a knowledge and understanding perspective. For many organizations, it may also be the case that the move into using blockchain is taken out of their hands. A number of large global organizations have adopted blockchain and may use this as a prerequisite for all parties in their supply chain. So in some instances, you may not actually have a choice, given that one of the players in your industry, maybe with the biggest market share, has actually chosen to go down this route. If those parties are not willing to comply, they will simply lose their contract. Organizations need to look at their industries and business partners and assess what they're doing and the potential changes that may be coming. So if we were to look at digital assets is essentially any type of digital file, and this could be, if we were to simplify it down, it could even be something like sort of an Excel spreadsheet or a picture. But if we look at digital assets that is maybe based upon a blockchain, I think before we go into cryptocurrencies and NFTs, one of the main things to really understand is the difference between terms called fungible and non-fungible. So the familiarity with the concept of fungibility in economics might help one better understand fungible and non-fungible tokens. The only difference is that crypto tokens express their fungibility property through a code script. Fungible tokens or assets are divisible and they are non-unique. For instance, currencies like the dollar are fungible. A $1 bill in New York City has the same value as a $1 bill in Miami. A fungible token can also be a cryptocurrency like Bitcoin. One Bitcoin is worth one Bitcoin, no matter where it is issued. Non-fungible assets, on the other hand, are unique and non-divisible. They should be considered as a type of deed or title of ownership of a unique, non-replicable item. For example, a flight ticket could be classified as non-fungible because there cannot be another of the same kind due to its specific data. A house, a boat, or a car, all non-fungible physical assets because they're one of a kind. That is where NFTs come in. It's non-fungible tokens that's there to essentially represent your digital assets that are separate to cryptocurrencies. So maybe art, that is digital art that is being created, digital music that is taking place, digital video clips, etc. One of the most adopted, or at least most well-known use cases for blockchain is cryptocurrencies such as Bitcoin, Ethereum, or as we've just mentioned, NFTs, which is gaining quite a lot of popularity. When cryptocurrencies first made an appearance, it was largely thought that they would eventually replace banks. However, we have recently seen a number of banks, financial intermediaries, and even countries adopting digital assets. Whilst there will be applications in this area that do extremely well, there will also be those that fail. But we can likely expect to see some major innovation in the space of cryptocurrencies, particularly around the way you see cryptocurrencies evolving as digital currencies of certain countries, such as Sweden, China, etc. When looking at NFTs, these are quite different to other digital assets. So whilst, as we've mentioned, whilst every Bitcoin is the same, every NFT is actually unique and could be issued in countless unique ways. For example, you could be issued an NFT as a way to identify you as an employee of an organization. It could be issued as a ticket or to a football match, or even as a membership to show that you're part of a particular club. An NFT is essentially like a Lego block used to build on a blockchain that allow various activities to occur. One of the most disruptive and powerful ways in which we see blockchain being used to send money in a matter of minutes using cryptocurrency Until now, it was only cost efficient to send money across the globe if it was a large enough amount, because our financial networks didn't make allowances for smaller transactions. However, blockchain now makes it cost effective to send micro payments globally. This creates countless new business opportunities for entrepreneurs or organizations who may be able to offer small solutions for small fees, but on a much larger scale. Cryptocurrencies are not the only type of payment rail that we see coming out of blockchain. For example, as we've just mentioned, digital currencies that are coming about, like the ones in Sweden and China. China rolled out their central bank digital currency, the yuan, for the 2022 Olympics. It uses many of the same features as Bitcoin. However, there is a little bit of a difference. So it is created and issued and controlled by the Bank of China. This is a different model, essentially, where the cryptocurrency is actually backed by the yuan that's sitting in a bank account. These various payment rails will also have a big impact on supply chains. A vendor in a different country will only ship goods once payment has been made, but the buyer will want their product as quickly as possible. Using the traditional SWIFT network, as we've mentioned before, this could actually take days or weeks for the payments to clear. However, these payment rails, such as the central bank and the digital currency, now mean that funds can clear in minutes, and the product could be shipped the same day, essentially. We can see the numerous push and pull dynamics around blockchain that are making the fintech space really, really transformative. We can expect to see an extensive amount of innovation to come into the space as blockchain grows, develops, and find a more permanent place in the business landscape. And that is essentially where we're kind of maybe going to end this particular webinar, from really a high-level overview to give you an understanding of blockchain, how the technical mechanisms essentially work together, some of the the main digital assets that is essentially taking place, and the trends that is taking place at the moment, and as we've mentioned, some of the challenges that is facing organizations in terms of the use cases that is facing them in terms of the barriers of entry. And one of the first steps, as we mentioned, is to increase your knowledge and understanding. I think, one of the ways that we can really do this is if you were to just go online, if you were to look at various sort of, courses that are out there, when you're looking at how do you implement blockchain within your organization, or even should you implement blockchain within your organization, the level of understanding of the technology should really not be underestimated. Where we see the failures in those use cases, it is really, if we were to drill it down, it is really due to the failure of the understanding of the technology. And due to the vast amount of information out there and misinformation out there, it's very important to really understand and get your facts straight with regards to how blockchain works from a fundamental standpoint, and how is it going to maybe transform your business. And I think when you go into that business transformation and digital transformation process, one of the first steps is really conducting a proper business process mapping of the status quo within your organization. Many people would say, I know exactly how my business works. I know exactly how my industry works. But when you break this down, and you actually go through that business process mapping exercise and you map the status quo, you'll identify all the different moving components and moving parts within your process, not just of your business, but of your supply chain and of your industry throughout all the cycles. If you don't fully understand that full business process at a granular level, you can never really move into a digital transformation space using a technology like blockchain. And so that is essentially what we would maybe recommend from a first starting point, is understanding of the technology and a proper business process mapping of your current business processes to identify, well, where can we actually, how is digital transformation going to make our current process better? How are we going to increase efficiencies? How are we going to decrease costs? Because if you can't essentially achieve that return of investment, then the question is, well, why are you looking to implement blockchain to begin with? And I think that's where we're going to end this webinar today. I hope you've got some food for thought and that you're able to take away a bit of the fundamentals that we were able to explain, and in terms of the terminology, in terms of the challenges. What I would also suggest is we have a podcast where we are discussing on our RSM Conversations in Business podcast, where we're actually going to be discussing in a series various aspects of blockchain and digital assets, from regulatory impacts through to a bit more on digital assets and how it is essentially being used and traded, as well as tax and tax impacts, specifically from a South African landscape and potential changes in terms of the treatment of cryptocurrencies that is going to be coming out from the South African Reserve Bank. So I really do encourage you to listen in and look forward to some of those webinars and series on our podcast that's going to be coming up. So thank you very much for your time today. Really appreciate it. And if you all have any questions, please feel free to reach out to us, and we'd be more than happy to sort of assist in any questions or any changes to digital transformation process, maybe utilizing a blockchain or otherwise that you may have concerns about.